Good morning, welcome to the market view for Monday the 16th of June 2014. Starting off with the 30-minute pound, we can see that the market didn't really do a lot on Friday the 13th. 6:30 we see the market finding support at the 169.50 level, then trading higher and putting a high for the day of 169.90 there, 10 pips short of the 170. The market then dropping back down to the 169.50. Then we have the PPI figures being released, and then later on in the afternoon at 3 o'clock, the market moving lower, giving a sell signal, and then at 1600 we see the order being filled. We notice the support at this 169.50 area, where every time the market came to it, it bounced off. We've got it here, we've got it here, the next bar followed by the bar at 1300 also. So no surprise really that the market was brought straight back through this level and then an attempt to move higher, so therefore resulting in a loss. And even with 50% above the high of this bar as it came back, it doesn't really mitigate the loss that much either. But it's just one of those unfortunate situations which just happens, where the next bar is very fast, moves higher and heads up towards the stop. It would have made things a bit better had the market have allowed it to move lower and then use this green bar, but unfortunately it came back, and they are the rules, so I'm not going to dress it up any other way and try and make it look like it was less, because unfortunately that happens on the very odd and rare occasion where the market will actually do this, where it comes back immediately and does this. So just one of those things. It was Friday the 13th after all. And again, you can see where the market just finds support at this area. So you want to keep this one in mind. 169.50 is a major support area for the British pound at this time. Again, you can see we're trying to get up towards this 170, which we know hasn't been breached since 2009, which we looked at in a previous market view. So it's a case of the long side is the best side at the moment for the pound. So let's just have a look at the bigger picture and see how this panned out for Friday and what we can see or likely to see going forward. What I'm going to do, let me just get rid of the markup for a second, and let me just show you, just anybody that hasn't seen this before, just to bring you up to speed with where we are in the bigger picture of the pound. Let me just do that first, and then drag the chart over to the right, and you can see where we are now in the bigger picture of the pound. This 169.50, 170 area, you can see it goes all the way back to 2009. We're stuck in this long channel of around, let's have a look where we are, about 5 years. So the market needs to break out of this. Well, 2009, certainly, we've got a high there of 169.21. So where we are now, we are above that, and we're heading back towards that 170 level. So we need to see the 170 taken out convincingly if the market is to move higher. So let's have a look in the near term, see where we are, and there you can see we've got these 3 days up. There was some selling pressure as the market moved higher, and now stuck at this 169.95 area there, which we had back in April. So this needs to be taken out if the market is to move higher. If not, then let me just mark up a potential downside for you. We've got from this low to this high to give us the first sort of pullback, and then we would have this low to Friday's high as well. So that's sort of the downside that you can expect should the market move low, but it's likely we're going to take out the 170 resistance there and move the market higher. On the news front today, we've got no high impact news items, but we have got this problem with Iraq, or all the things that are going on in the Middle East at the moment as well. So that could have an effect on the markets as well. So just keep that one in mind as well. So nothing on the news front. Moving to the Dow, we're getting the a bit of a pullback that we were looking for. Friday, we can see we got this inside bar, which means the high and the low of this price bar are within the high and the low of Thursday's price bar, so thereby creating an inside bar. So it's inside of the range of Thursday's price bar. The markup of the fibs on Friday are still in place. They are still the current ones as well, so that's where we are. We need to take out the high of this bar, by the way. We've got some selling coming into the market, as you can see from the volume bar there, so there must have been some selling around. The high of this bar is crucial. It needs to be taken out. And in fact, one other thing that you can do, which I haven't shown yet, is you can actually draw in, when you get a selling bar, 62 and 76 of the selling bar. And you can also do it on the upside as well. And watch the 76% inside of this bar to see if it gets taken out as well, because this is going to be a crucial area, which is 1608, so 16,000 area, 8 pips or points above that. I expect some resistance there as well. Right, well, that's it for this Monday morning. Market's fairly quiet as I record this morning, so let's hope and see if they actually come to life. All things being equal, I will see you in tomorrow's market view. As ever, thank you for your support, very much appreciated, and all things being equal, I will see you then.